So let's talk about two IPO plays today, and one of them in this CYBR, which I think some of you may have thought was sketchy, dodgy, too much risk, too much slippage in it originally when it came out. But I want to show you where it actually got good and why you wanted to buy it. So the first thing about why we wanted to buy this was what? Float. Very small float, so people can buy and prop this up. Small float means potential for the stock to go much higher on a little bit of volume. More guys can come in and drive it up. What else?
IPOs have been hot?
Yeah, this sector, it's in a really hot sector, right? It's in that cybersecurity space. Okay, that's been a hot sector. That's check number 2. We want to try and err to the side of finding ways to be long stocks like that. What else? What was the IPO price?
$16.
16. Where did it open?
25.
So it opens up well above its IPO price. First, when it comes out, it's sketchy. All right, it's below 25. It's not looking good. I like to buy stocks that are actually above its IPO price and holding above the opening print. It wasn't doing that. It wasn't holding above 25.10. But then it got good. And so, as Raj was pointing out, it makes this 3-point up move from 24 up to 27. Okay? Now, it's above its opening print. It's above its opening price. It's shown you that it can really run. It's shown you that our thesis that people can just buy and prop this up may be in play. And so for that, I actually want to look at support levels by pullback and see if it'll go to where? Potentially. No, I mean, we want to get long. We don't want it to go down. So when it pulls in and stops going down, I'm thinking it can go to 30 because that's just the measured move, the 3-point measured move from 24 to 27, from 27 to 30. This is not an exact science, but that's sort of what I'm thinking. I'm thinking I really do have that potential for this play. And so it pulls in, and you can see on the chart that there were really 2 areas that you might think about buying it. One of them was all the way back into that 24.20-ish area, and another one was into that 24, 50, 40-ish area into a sort of a pullback. All right, and so you had those 2 opportunities, and then you sort of hit it out below 24, maybe hit it out a little bit lower than that. And the idea is find a consolidation area on the way up, wait for it to pull back in, buy it there, and hold it for the pop. It's just, let me find a support area, let me find a spot where I can control my risk and play it for the pop. And you look at the areas of interest on the way up, the areas of potential support on the way up as potential buy-in areas. Does that make sense? And you hope that the momentum traders are going to follow through. If it doesn't, you hit out. So the risk reward is like, maybe 50 cents to 3 points. That's still a pretty good risk reward. Sometimes you can get it even tighter than that. Sometimes the reward's even higher. And it actually is trading 31 bucks in the after hours. 30 was just a price that we sort of came up with based on the measured move. But you could have also bought that 26.20 area and done what with it? What's another way to sort of play it? You don't have to play it intraday. You can swing it, and you can just play it for maybe a follow-through move tomorrow, a gap up tomorrow. There are different ways to trade it. You could certainly have made it into a swing trade. Okay? And then let's talk about the really big one and just point out a pretty easy way to attack an IPO. So Tommy, what was the big one?
CFG.
Okay, so CFG, the IPO price is $21.50. This is a simple trade, almost embarrassingly simple, but we talked about this as a good opportunity. It was above the IPO price. You could have bought whatever you wanted at $21.51. It was there for you, and you buy it in front of the IPO price. You hit it below the IPO price. It never went below the IPO price, and it went up to 22. And it had trouble at 22. Pulled in, but that's a good move from 21.50 to 22, particularly for a very thick stock, right? So I'm still watching it. 22 becomes resistance a couple of times. It gets above 22. What do? We add. There's a little bit of a resistance level at 22.10. It got above there. We add, and you do the best you can trying to sell it. It then had resistance at 23 into the close 4 or 5 times. It couldn't get above there. Finally did. Added a little bit there. This is one I actually took out overnight. I didn't see it slowing down yet. I don't know if there's going to be follow through. It is a fixed stock. It's not as likely to gap up, but I don't see the top yet in this stock. So we're going to use 2150 as support. When it stops and we see intraday resistance and it clears that, we're going to use that as entries as well. All right, so I chatted in real time. If it gets above 22, I'm going to buy. And then the other really, really good play was it goes from 22 up to that 2240-ish area and then pulls back in to that 2216 area. And I chatted in real time. This is where you really want to buy a lot. This is where you want to buy a lot. And the reason for that was that's where it broke out from, above that 22 to go up to the 40s. It was also really strong. It had been strong all day. Okay? It was showing you that it had some room to go. 23 was definitely in the cards. And it had that 30-40 cent drop back into a support area that it broke out from. That was where you could have been really big. You could have bought 16s, 11s, whatever you wanted, and you do the best you can with that. Okay? So that's how we attacked 2 pretty good setups in IPOs, and I hope that helped. Thanks.